The hype surrounding electric vehicles seems to have come and gone, but are EVs really facing a downward trend? And we're talking about when it comes to their stock prices. Brent Wilsey from Wilsey Asset Management is here to talk about EV companies and smart investing strategies. Good morning, Brent.
Well, good morning. We're not just talking about investing in the companies, but should you invest in buying which vehicle? Because the average age of a vehicle on the road in the U.S. today is 12.5 years.
Interesting.
You go back to 2000, it was 8.9 years. So there's a lot of factors driving the auto market now. And obviously you have older cars. And one thing I was thinking, like, I would imagine, because more stay-at-home workers now, not as many miles driven. No, that's not the case either. We now drive in the U.S. 3.3 million miles per year. Back in 1994, it was 2.3 million.
Yeah.
So that's up. So the age of vehicles are up. What's really going to move the car market is the price of oil. And oil is now pushing about $86 a barrel. And gas will go up. So then people think, I think I want to get an EV versus a gas vehicle. Now on the other side, I do believe that there's a lot of oil out there. So I think that's probably at the top, maybe $90 a barrel. But if it goes back down, the people say, well, why should I pay that extra for an EV when I get an ICE vehicle at a less price? So a lot of different things. And then also to the jobs report on Friday, 300,000 jobs created. You can't get a car if you don't have a job to get credit. Well, a lot of jobs so people can get credit. So there's a lot of car buying going on and will be going on. But the question is, which car do you buy?
Yes, and I think a lot of people are trying to make that decision, especially as California is pushing EVs and is saying, oh, hey, you're only going to be able to buy gas vehicles in California for so long. I think more people are looking at them. And so is that kind of one of the trends here that we're seeing?
Yeah, and what I want to try to do, if we have time, to talk about all the EVs and electric car companies, which ones to actually buy for a car. Because one thing you don't want to do is buy a car, an EV, you buy, like, I'll say a Fisker, and then a year later, they're bankruptcy, you can't get it serviced.
Right, I'm like, I don't know what that is. Well, okay, so wait a minute. So the most popular EV has got to be Tesla. Most people know what a Tesla is.
And you are fine if you buy a Tesla. I mean, Tesla is having some problems, though. I mean, their stock in November of last year was 400. It's now around 160, and the problems they're having is that their models are kind of getting stale. They haven't come out with new models, and what happens is that with a car maker, you've got to come out with new models. Now, Elon Musk, his direction is the robo-taxi. Well, General Motors last year had a major problem with that. I think we're years out from that happening. So he has to design some new cars, because if you already got a Tesla, like, why buy a new one? They're the same. So, and people that want Teslas got them already. But their deliveries were, what, 368,000 for the quarter? That's down 8.5% from last year. The estimate was 457,000. Now, there's no concern about Tesla stock going under, going under. They do have cash today. They've got, what, $29 billion in cash. They make about $13 billion in cash every year. So if you're buying a Tesla, you're safe. You don't have to worry about, oh my gosh, you're going to go bankrupt.
Right,
no
not like Fisker.
Not like Fisker.
No, and one of the other popular brands that has been gaining traction is the Rivian.
The Rivian. Rivian is probably, I'm going to say 50-50. Rivian has some good numbers on them. Now, I will tell you, the high on their stock was 106. They now trade at $10 a share. They are having problems. The difference with them, when they came out with their initial public offering, when they first went public, they had, what was it? They had $18 billion in cash. They're now down to $5.9 billion. So they can go, but they've got to start making money on the vehicles. And these smaller car companies, they're not making money. Rivian loses $43,000 on each vehicle sold. They've got to turn that around.
And what about some of these bigger car companies like Ford, GM, and what they're doing in the EV market?
And those are the ones you want to go to, because you've got the bigger car companies. You're not worried about them going under. Again, with Fisker, Lucid's another one. You got to be careful. I think they're going to probably go under next year. But Ford and General Motors, they're safe. I mean, Ford has cash $29 billion. They make in cash $15 billion a year. You buy one of their EVs, they're going to be fine. You don't have to worry about who's going to service it 2-3 years from now. General Motors, the same thing. General Motors has $21 billion in cash. They just did a $10 billion stock buyback. Their stock at an all-time high of 44, up from 26 a year ago. So they're doing fine. So if you want an EV vehicle, you like that, you want to be, get those, go to Ford, go to General Motors, go to a big car maker, because these little ones, you could buy those cars, and all of a sudden, 2-3 years down the road, where do I, and software updates.
Good question.
With their technology, you got to be very careful with those.
Definitely. All right, Brent Wilsey, thanks for stopping by.
Welcome.
Great to see you as always.